Papua New Guinea grey listed. Again, what it means for the country Papua New Guinea, PNG has once again been placed on the international grey list, raising concerns about the country's financial systems, economic management, and global reputation. What does grey list mean? A country is grey listed by the Financial Action Task Force, FATF, when it is found to have weaknesses in preventing money laundering, terrorism financing, and other financial crimes, but is actively working to fix those problems. Grey listing does not mean a country is blacklisted or sanctioned. However, it signals to international banks, investors, and financial institutions that the country has regulatory deficiencies. As a result, foreign investors may become cautious, international transfers can face stricter scrutiny, and borrowing money internationally may become more expensive. Why this matters for Papua New Guinea? For Papua New Guinea, grey listing could impact international banking transactions, foreign investment confidence, access to global financial markets, economic growth prospects. PNG is a resource-rich country with major exports in gold, copper, oil, and gas. However, despite its natural wealth, many citizens continue to face high unemployment, limited infrastructure development, and rising living costs. Concerns over government borrowing. In recent years, Papua New Guinea has increased borrowing from international lenders and development partners. The government argues that loans are necessary to fund infrastructure projects, public services, and economic recovery programs. However, critics claim that rising national debt has not translated into visible development outcomes. Many roads remain in poor condition, healthcare services struggle with shortages, and rural communities lack access to basic services. Economic analysts warn that continued borrowing without strong accountability and transparent financial management may increase the country's debt burden, placing pressure on future generations. Accountability and reform. Financial experts emphasize that grey listing often reflects systemic governance issues, including weak enforcement of financial regulations, insufficient oversight, and institutional capacity challenges. The PNG government has stated that it is committed to implementing reforms to strengthen financial transparency, improve regulatory systems, and comply with international standards set by the Financial Action Task Force. Successfully exiting the grey list will require stronger anti-money laundering laws, improved monitoring of financial transactions, greater transparency in public spending, effective enforcement against corruption. The bigger economic question. Many Papua New Guineans are asking a broader question. How can a country rich in natural resources continue to struggle economically? Economists point to several structural challenges: heavy reliance on extractive industries, limited diversification of the economy, governance and corruption concerns, weak infrastructure, development, global market volatility. The path forward will likely depend on stronger institutions, responsible borrowing, improved public service delivery, and a long-term strategy focused on sustainable economic growth